So, welcome to METACO Talks. I'm Seamus Donahue, the VP of Strategic Alliances at METACO. If this is your first time joining METACO Talks, it's a bi-weekly podcast where we invite thought leaders from the digital asset space to join and discuss their operations, current events, and the opportunities in an exponential future. So today's a unique episode as we're broadcasting live from the Network Forum. The Network Forum is the preeminent event for the network management, custody, and post-trade community. And I'm proud to say our guest today is Maxime de Guillebon, who is the CEO of Zodia. As someone that started out as a branch manager of a bank, rose through the ranks in cash management and transaction banking, the venture arm of a bank, and is now the CEO of one of the leading digital asset companies. It would be great if, Max, if you could spend a few minutes to introduce yourself and your journey to digital assets and a high level the ambitions of Zodia.
Sure. Well, first of all, thanks a lot for having me. Great to be part of the METACO Talks and the TNF Forum at the same time. So I have a very sort of conventional background. People in the crypto community would probably call it boring as well. As you rightly pointed out, my time in banking has been largely in commercial bank across various countries. Started in Ireland, sold transaction banking product in the Middle East, Singapore, Vietnam. And in Vietnam, to be fair, I discovered innovation. And that's something that I kept after that, sticking to Standard Chartered probably for now 15 years. And just so that I anticipate a little bit of question on, how did Zodia sort of came to play? I had the privilege of looking after the bank's channel, online banking platforms, Swift, etc., and blockchain, because to be fair, it was new and nobody really knew where to park it. So people thought that was just another channel that the bank would interact with its clients or partners. And from blockchain, questions started to come to crypto. I'll talk a little bit later. I'm sure there'll be a question on, how do we do that in a large financial institution? But essentially, it was a sort of natural progression, not planned at all. I'm not a crypto native person. I'm not a technology person either, although I became one. But yeah, so that's really my background. And we set up Zodia. I think we incorporated the entity in the UK in January 2020. We are about to go live. Having ticked all the box internally, regulatory, and so forth. And Zodia really positioned itself as being a truly institutional grade custody platform, and we are very clear on the institutional grade, i.e. we generally a custodian built by a custodian, for custodian and for investors, and very clear on the fact that we look at institutions. So large institution, funds, global custodian, banks, etc. And we bring really the custody element of it. So we don't try to do everything. We're very, very focused on custody only. So that's a little bit about myself and a bit about Zodia as well and the genesis of it.
Thanks for the background. I think the fact you are from the traditional space is actually very interesting. And I think given we're at the Network Forum today, we're probably many of the audience is very much the same. So it'd be interesting to see how you frame the opportunity in cryptocurrencies.
To be honest, we didn't.
Okay.
No. Let me qualify this because it's very important. It's extremely important, especially for I guess people who come from a regulated financial institution background, right? We didn't start with a use case. We didn't start in exploring, I would say, a revenue opportunity. We generally started to look at crypto assets because clients were asking what the bank's view was, and the bank didn't have a view. And we, instead of starting with the opportunity, we actually positioned a document internally to say, these are the risks, right? Here's what crypto assets are all about. These are the things we need to watch out for. But by the way, there are potentially opportunities in a few areas. And we looked at retail, we looked at, I mean, not just me specifically, but it was a wider exercise within the group. So generally speaking, we started looking at, I would say, the risk side of things and education. And then we're comfortable enough with managing these risks so that we could look at the opportunity side of things. And I think, to be fair, there was also an element of, in the process, getting the group, especially Bill Winters, the group CEO, very comfortable with the fact that digital assets were here to stay. And that obviously was the backbone of the project, because that's what keeps you going. If the fact that there was a general understanding that it was here to stay, but the approach we've taken was very much risk first, opportunity second, or reward second, as opposed to trying to jump on the crypto bandwagon.
I mean, those steps, I mean, I think we see many, whenever we speak to traditional, let's say, legacy firms that move into space, I think that evolution is very similar. Understand the risks, understand the asset class, the size. Now, I mean, what were the challenges when you got over those hurdles, like this asset class is here, and understand the regulatory risks? What were the challenges building the business case? I mean, you had client demand, you said, so that's obviously a starting point.
We didn't have client demand, actually. We had client inquiry at the very beginning. I mean, keep in mind, we started this in early 2018. That was the crypto winter. There was very little client demand.
Indeed, still licking their wounds at the time. Yep.
So there was very little client demand, which is why we could generally progress through, I would say, a risk assessment and it was never meant to be a business. It was never meant to be something the bank was going to offer. That just happened through, I would say, a lot of steps that we went through. So if you look at the big challenges, really, I think the biggest one, I would say, was getting the organization comfortable that crypto assets were here to stay. And the fact that it's an investment, it was a bet at the time. It was difficult to probably justify a business case, to be totally honest. It is now. 3 years ago or 4 years ago, it was a lot more difficult. So once you get this, I think, fundamentally speaking, what is very difficult to do is taking the standards and, I would say, the framework of a regulated financial institution. And that includes technology standards, that includes regulatory standards, that include compliance and financial crime standards, that includes all of these standards, as well as the role of a custodian. So you look at UK CAS rules as an example, and transposing this into the crypto asset world. Custody may sound the same as, if everybody call it custody. It's fundamentally different, not necessarily in the principle, because they follow the same asset safekeeping principles, but on the way you implement those principles, and you essentially bring them to life and you put them into production. That is, and will continue to be, I would say, the greatest challenge. The other piece which we are discovering now as well is the fact that it's great to have a custody solution, but now that the ecosystem has evolved a little bit, clients are asking for other services. Yeah. They want banking services, they want leverage, they want liquidity. And you essentially now, as a regulated financial institution, facing a world of sometimes regulated, most likely not regulated counterparts. And again, the whole risk management framework you need to put in place to get comfortable with additional services, with additional partners that didn't exist 5 years ago, is something that I would say is probably the upcoming barrier to entry now that people have started to master, I would say, technology and key management and so forth.
Well, I mean, certainly I think you've been part of the journey where there were no standards in 2018, and getting regulators up the curve was also part of that journey, I imagine, basically. I mean, it seemed to be a lot more accumulated knowledge on the regulatory side than there was then. So I imagine that was a big part of the journey. I think from what I know of your operations, you've launched with custody, let's say safekeeping of crypto assets to start with. We hear a lot of buzz about tokenization. I mean, is that part of the plan as well? And what does tokenization even mean to you? I'd be very curious to hear what do you think that is? Because there's big stories, but what's the reality?
I would say what is tokenization in the first place, right? So I think that there is a variety of things. But if you think about tokenization, being able to, I would say, create smart contract that represents assets and, creating them, moving them, storing them, trading them, facilitating the safekeeping of these tokens, then I think, the technology is actually the same. Yeah. What changes is really the nature of the underlying token, which is the regulatory environment, how this is being treated by regulator in terms of licenses, but also we've seen in terms of capital treatment to perform services around these tokens. So technically speaking, yes, the infrastructure is there, but we haven't really seen a lot of demand for tokenization per se. There's a lot of excitement. I'm not sure there is a use case which makes commercial sense right now.
I mean, might there be a use case? The initial use case, is it going to be in the security space? When there is a use case, is it going to be in the security space? Is it going to be things like NFTs, or is it going to be in the payment space, for example, like a DM type initiative?
It's a good question. Again, based on the clients we have, which is really the institutional segment, unlikely to see any sort of pioneering tokens.
Yeah.
So a lot more around stable coins, some of the unregulated assets potentially. But I think one thing which is very important to keep in mind is whoever wants to talk about tokenization, I think needs to master crypto first. Because the ecosystem is the same. It's going to be the same railway, the same infrastructure, the same market makers, the same liquidity pools, the same infrastructure and network of participants. It's going to be very difficult to create something on the side. I think it will have to ride on the same cryptocurrency network that is being built today. So I think whenever that happens, obviously being part of that, the crypto ecosystem today, will be very well positioned to just enable an additional token.
I mean, that's funny because one of our taglines that we often use is build for the crypto, stay for the tokenization. I mean, it's almost, if you have the crypto infrastructure, it's a free option on the rest. Building the tokenization first is you're waiting, and we're not sure what you're waiting for exactly. What's the catalyst, basically? So,
I think for now it is still crypto. If you look at the market cap, it's crypto is the use case for now.
Now, I mean, I'd love to talk about as you described, kind of the comparisons to the fintech natives and the unregulated space. But before we get to that, I mean, what about you've got a kind of a unique structure. You set things up as a separate entity. It'd be interesting to know what's driven that, because when we talk to firms, it seems to be two models basically. There's that, or there's the single point of entry for clients for, let's say, traditional assets and crypto. And there's that model where you combine it with existing business. What's driven how you've set up?
So there was some very practical consideration to setting it up as a separate entity. And then there's one which are probably a little bit more, I would say, nuanced and probably a little bit less evident. So I think if you think about setting up a crypto business or digital asset business, location is key. And when we set it up, Zodia, for us, we wanted a very highly reputable regulator, and the FCA obviously was sorry. The FCA was the right one. But keep in mind that Standard Chartered operates in Asia, Africa, and the Middle East.
Of course.
So it doesn't operate in Europe, doesn't operate in the US as a commercial business. So there was anyway nowhere for us to ride on an existing license. So that's consideration number one. Two, I think, as you rightly pointed out, the licenses required are different from banking license in some cases, in most cases. In the UK, it is. You still need to go through a vast registration, which is different from a banking license. So sometimes very different on what you can leverage. Three, I think the technology is fundamentally different. And I think you also, because of cyber risk, you want to isolate your tech stack from a group. So, but the technology is, nobody uses HSM to secure their API keys today or these kind of things, right? So needed to anyway build from scratch. And the fourth one, which is potentially not as obvious, but critical, is attracting talents, attracting people. The best engineers today, and I'm not necessarily naturally going to technology organization within banks.
Yeah.
They're a little bit more attracted to fintechs, to the shiny technology, right? And crypto happens to be one of them. So it's very important for us to also make sure we have the right environment to attract the best talents, and setting something dedicated to crypto assets actually helps us to meet those four sort of key considerations, which I've just mentioned.
I mean, it definitely sounds like you've been able. The strategy you've taken also enables you to be a very agile brand, connected to a large organization. So it'd be interesting, given you've set up this structure, how do you work with SCB? And also, given that we know that it's announced that Northern Trust is also part of Zodia, how do you all fit together and operate together?
So I think you need to look at crypto assets as an enabler, right? I mean, for people who are familiar with custody, crypto is nothing but an emerging market, a new emerging market.
Interesting.
And what you do when you have a new emerging market, you need a local provider, that connects to the ecosystem, that understand the regulation of that market, that navigate on your behalf. But your clients don't just operate in crypto. Our clients don't just operate in crypto. Crypto is probably, I don't know, between 0.001 and maybe 30–40% of their portfolio. So the connectivity to traditional finance is absolutely essential. The connectivity to fiat, the connectivity to SWIFT, the connectivity to global custodian, the connectivity to FX, the connectivity to leverage and lending and all of these services. And that is not something, as I mentioned earlier, that we will provide, because we are very focused on custody. So actually the relationship with either Standard Chartered or Northern Trust, but actually with other global custodian that we engaging with, is just an enabler to enable a new market so that they can offer that within their global offering to their clients and integrate that with all of the services that I mentioned earlier. So no, there's no competition. It's actually a great way of expanding the business. As I said, the emerging market example is probably the best one we can find here.
I haven't heard that before, but that makes a lot of sense the way you've explained it. I mean, given this journey you've had and the lessons learned, again, given the audience in Network Forum is probably looking at this asset class, wondering if they're not already engaged, wondering how to do. Is there advice you would offer to other firms, large firms that want to get into this, and how to do it?
So I can only look at it from what we had to obviously go through, but I think consider risk before reward, and I mentioned that earlier. It's fundamental. Nobody will ever sort of look at the reward side of the crypto assets. So making sure that's well understood is key. Get C-suite support. Yeah. And I have to say that, sometimes these ideas come from innovation teams, but actually you need to rally the rest of the organization to actually make it happen. And that federating everybody around the project and making people comfortable is by far where I think a lot of the challenges happen. I didn't want to use the word delay, but it takes time. In regulated entities, it takes a lot of time. If you're a crypto native firm, then obviously you can, and you're unregulated, it's a lot easier. And the third one is education. There is a lot of misrepresentation of what crypto are, the risk underpinning crypto, the tools that are there to mitigate these risks. And sometimes people will get very surprised that some of the tools are way more sophisticated than one you can find in traditional finance. So education to your own organization, your partners, your shareholders, your clients is, and they probably work hand in hand, right? But I would think this is the right recipe.
I mean, I think those are very practical insights. Why don't we change tack a little bit? So obviously you mentioned you see yourself as an enabler. Now, obviously in this space, let's say the solution you build is part of that enablement. You've clearly built, as you say, it's new technology compared to what the old stack that supports traditional assets is, or even any infrastructure in a bank. How did you approach the usual build, buy, partner in the crypto ecosystem as you see it? To
be honest, we wanted to buy. We were very keen to get an off-the-shelf solution, and we thought it would be easy. The reality is, because of our approach to look at custody first, we didn't really find any solution that covered our requirements end to end. And I think also reflecting on it, this was the right decision, because if you provide asset safekeeping, you need to own your engineering, your design. I'm not saying own each part of the technology, but you need to own the end-to-end security. You need to make sure that it's built in a way that can integrate with a lot of the side tools, right? The screening tools, the transaction monitoring tools, the compliance tools, the onboarding tools, etc., which typically sits completely outside of custody in the offering that we see today in the market. So very important for us to own the design, very important for us to bring technology, because we're not experts. We don't build HSMs, right? So we need to be realistic as to what we're good at, but also bring the right technology to fit into that tech design. And the reason why we invested in METACO for those, again, in full disclosure, but that was public information, I think a year ago or something like that, was the fact that obviously part of the METACO technology was very good for us, very useful in what we were trying to build. I think the other piece is we don't really know where the market is going to go. We don't really know where the regulation is going to go. So it's very difficult to buy something which is, I would say, off the shelf and rely on somebody else to make the changes you would need to do as a custodian to either satisfy your clients, your roadmap, or your regulators. And if you get an off-the-shelf solution, you kind of stuck. If you build it in a modular fashion and own the design and the stitching and the stack, it's a lot easier to replace component. I usually take the example of a car, which I think is really what it is. You get an engine and you get a chassis, but then, if you'd like to change the side mirror, you change the side mirror, and you can buy a fancy, I don't know, leather seats from somebody who does fancy leather seats, right? But so
nice rims. Yep.
But the design of the car, you do the design of the car, and I think this has been really our approach, and I would really question people who go and white label solution, buy it off the shelf, or the other way around, the ability for a single company to build it from scratch, end to end.
Yeah, I think we've seen a similar evolution. I think if we were pitching our product back in 2018, we would have said we have an end-to-end product. But in the reality is, as you said, the market dynamics it just iterates and evolves so quickly that I don't think anybody in the market does. We talk often about orchestration and flexibility. Not you mentioned it already, but not to belabor the point, because I think it is critical for people to understand that. How important is this flexibility and this optionality on the future to you?
Maybe the best way of looking at it is to choose an example, which is very close to our heart. We've been very vocal about implementing the travel rule. Yeah. So travel rule was a recommendation called known as R16 by the FATF in August 2019. Yeah, and what the travel rule says is, when you have custodial wallets, you need to exchange beneficiary and remitters information between those two custodial wallets. The fact that we own the tech stack means that we had the agility to actually implement that relatively quickly, and we're already live on travel rule. And we see that a lot of our counterparts with whom we try to connect with are saying, well, I'll rely on a provider. The provider doesn't have that feature, so I actually cannot connect with you. And the reality is travel rule is now low in a couple of countries. It's low in the US, it's low in Switzerland, it's low in Hong Kong, it's low in Singapore. And unless you actually have that agility where you have the core components, but you can plug in other features, just because you don't know what the roadmap is going to be. It could be features, it could be regulatory changes. I think that helped us a lot in being very, very quick in responding to that requirement of implementing a travel rule solution, and doing it at a relatively, I would say, short implementation, limited cost and resources, and being live in the market as probably one of the earlier custodians to have done that. So yeah, very important to keep that agility. You have no idea what is coming your way. So I don't think anyone should be sort of stuck in a box for that. Not for crypto.
I think those are great examples. We really push this as a key USP, being flexible, have the agility to orchestrate, whether it's, as you say, a FATF travel rule or different key backends, or new services you may build, staking, prime brokerage, etc. You need end-to-end security and flexibility around plugging these in, basically. We're getting close to the end, so maybe speaking about, let's say, other services or where you're going, we hear a lot, at least because we talk to both crypto native and traditional firms, and it'd be great to hear, kind of coming from the traditional space, about DeFi. How much interest is there at DeFi on your side?
Very little.
Okay.
Very, very little. We don't see that from our clients. And again, maybe it's a factor of who our clients are. Very little interest. Where we're seeing interest right now, I'd say there's broadly three large areas. One is access to liquidity and creating that ecosystem, right? The custodian, connecting the custodian to other services. I mean, we're participating with TPI Cap to try to create this kind of ecosystem and pool of liquidity. There was a press announcement made yesterday on their spot trading venue, right? So really that's going to be very important. You build the custody, but now clients expect a network. They expect ancillary services. So global reporting, connectivity, lending, prime services, margin trading. And to be fair, a lot of what we're seeing is trying to get crypto assets much closer to traditional finance than trying to bring traditional finance into the crypto world, which is kind of fascinating. And, you know, maybe I'll have death letters from crypto purists if I keep on saying these kind of things, but that's definitely for institutional clients what we're witnessing. And the third one, which is emerging, but I think it's important, is the ESG agenda. I wouldn't say it's necessarily on the back of Elon Musk sort of, you know, various tweets, but generally speaking, it's something the industry is taking relatively seriously. And because it's new, I think it has the flexibility to engineer it sort of more on the E side than the SG, by the way, but you know, in a green fashion and forcing, I'd say, some green standards maybe more easily than for others. So for us, it's way more CFI than DeFi at the moment, and green CFI if we can.
Well, hopefully a lot of the developments we've seen moving mining out of China helps address some of that ESG element. I mean, just before we go, I'd like to touch on one last thing. I mean, you touched about your institutional clients. I'd love to know, you know, what targets are your client? Excuse me, what type of clients are you targeting? And you know, given your comments around, you know, enabling this space, what do you view as your USPs versus, let's say, digital native firms in this space?
So in terms of clients, we're really looking at, so we position ourselves as being a qualified custodian. We're not an infrastructure player. We are a qualified custodian. So anyone who needs to safeguard clients' assets would have a need for a qualified custodian. Banks, asset managers, issuers, funds are typically private banks, typically the sort of financial institution or organization we speak to. And obviously, we're also working relatively closely with global custodians, right? So, I mean, I mentioned the emerging market is, we are just that. We are a custodian for an emerging market. So how do we enable access to that emerging market through global custody? In terms of how we somewhat different, well, I think you would have seen from my background, right? We're not crypto native. So we really came with custody and we applied custody to crypto assets. As opposed to a crypto native firm that would have gone through the technology and then push the technology to custody, or trying to understand what custody is. Hopefully, being a subsidiary of regulated FIs, we bring trust, which was fundamentally lacking in the crypto world. I mean, and by trust, it's anything from governance to your legal agreements to your risk management platform. I mean, the example in South Africa where two brothers just left with 2.5 billion. I mean,
it's amazing that's still happening. Yeah,
it's still happening, right? Yeah. And I think the third one, which is going to be more and more real, is the fact that we work with traditional finance, not against them. We are really trying to promote the integration of crypto assets and traditional finance, because that's the only way it's going to work. There may be a portion of the ecosystem that will go completely unregulated and wants to compete and do something fundamentally different. But again, our background, our history, and what our clients are asking us to do is to make sure these two worlds are connected, as opposed to completely opposed to one another. And that's, I guess, an approach we haven't seen that much in the crypto space.
That's super interesting, Maxime. I think that'll resonate with the audience here at Network Forum particularly. So
I hope so.
You know, thanks for joining. How can people, I mean, worthwhile asking, how can people get in touch with you if they want to learn more?
So, well, more than happy to connect via LinkedIn, or I think there is a contact form on our website, zodia.io. But otherwise, I'm here as well to take any questions if people want to have any. So yeah, very keen to entertain any conversation.
Thanks, Max. It's been a pleasure. I've learned a lot, and we'll see you soon. So thanks everybody for joining METACO Talks today. I think we'll be back on our regular sort of format in 2 weeks' time, and I hope to see you then. Thank you.
Thanks for having me. Thanks for Seamus. See you 2 weeks' time.
Pleasure. Yep. Thanks.
Bye.
Ciao.